All right. Thank you, everyone. My name is Getchins Cadet with Cumulative Free Group. We're happy that you all here today. And today is our webinar series, and we will be discussing NetSuite Advanced Financials. So before we begin, all webinar participants will be placed on mute. So if you have any questions whatsoever, please use the Zoom chat to communicate with us. And this also goes throughout the webinar. If you have any specific questions regarding some of the features we are going to show to you, please also use the Zoom chat for that. You will receive a recording of this webinar in the next few days, so please engage with us so we can give you any additional context regarding some of the features we'll be highlighting today. Contact your assigned account manager, or you could reply back to any of the emails that we send over to you, and we'll be sure to route you to your assigned C3 advocate. Now, before we begin, let's talk about our speaker. Our speaker today is Eric Van Lent. Eric is a CPA, and he will be walking everyone through this presentation of the advanced financial features within NetSuite. Eric, I'll toss the baton over to you.
Great, thanks, Getchins. Great to be here with everyone today. So just as an introduction, my name is Eric Van Lent, as Getchin mentioned. I'm a certified public accountant. My primary background has been corp controller work for both public and non-public companies. I've led about 7 NetSuite implementations. And I really have been focused on trying to optimize systems to make them more efficient for financial users. I'm based out of Nashville, Tennessee, and been with C3 now for just slightly over a year. Okay. So now we're going to transition into the webinar. Please feel free to ask any questions. I'm going to go ahead and pause the share for a second, and then I'm going to pull up my screen. Okay. Give me 1 second. Okay, can everyone see my screen?
Yes, sir.
Yes.
Okay, great. So, all right, so I'm going to be walking through the advanced financials component today, and this is one of my favorite aspects of NetSuite because when I was in the shoes of being a controller, I would have to do a ton of amortization schedules, and what I really did not like about them is having to do that all in Excel. So I think one of the things that NetSuite did really well was kind of bring that into the system so you can have full traceability of the amortization schedule from start to finish. And so if you notice in here, I've created for us some tiles in here. So we're going to be walking through allocation schedules. We're going to be walking through amortization schedules as well, both from an intercompany perspective and just departmental P&L perspective as well. So I'm going to go ahead and start with our amortization schedule. So I created this tile here. You can create as many tiles as you want, and this just gives you easy clickability into the functionality. So opening this up, I'm going to talk about the amortization schedules that you can create utilizing NetSuite. So if you see in here, what we've got is our amortization schedules. And essentially, this is the component that holds all of the prepaid amortization. So you can create as many schedules as necessary based on the type of transaction that you're working with. So as an example, today, I'm going to be looking at source transactions, and these are the bills that I've created. But you can also create amortization schedules based upon a journal entry as well. So I'm now going to show you the template. So this is where the meat really is with respect to this process. So the amortization template is what houses the information on how the system is going to automatically amortize those schedules. So I've created a few in here. One's for prepaid insurance, one's for building lease, and then I've just created another prepaid as well for this demonstration purpose. So you have a few ways in which you can complete this. So as an example, in this prepaid insurance amortization, we've specifically created an account. This deferral account here is going to be specific to prepaid, right? And so you can determine exactly what type of account you want it to house near. I do this a little bit differently, but you have a ton of flexibility with how you want to drive this particular aspect. So with the deferral account, that's going to be, obviously the where the prepaid is going to debit in the ledger, and then you can have a contra account where it's going to offset as well, and then that target expense account. So this is where it's actually going to amortize over the life of the amortization schedule, and you can specify specific periods in here. So there's a few ways in which you can set these up. Now, the one that I like the most is the one that I've created here, which I've labeled C3P prepaid. So I'm going to go ahead and edit this schedule. So you give your schedule a name, right? Obviously, whatever name that you want it to do. So it could be prepaid expenses, what have you. You have a type of amortization. One is for standard and one is for variable. So think about the variable component with respect to the amortization as like a kind of a percent complete, whereas the standard is probably most common within our customer base. So then you have the prepaid amortization method, right? So NetSuite gives you a few options out of the box. And I would say about 90% of customers that we deal with are in the prorate first and last. But a lot of manufacturing companies would be on the exact days. And so the exact days is exactly that. So as an example, if you created an amortization schedule based on 115 to 12/14/2026, as an example, it would amortize the exact number of days in each month. So configuring for February being either a leap year or just the normal 28 days. It'll expense in 28 days. This is primarily used, I've seen in manufacturing organizations. Now, the straight line by even periods is exactly that. So irrespective of the date, so in that 115 example, it's going to amortize over those periods. So if it's 12 months, take the amortization and divide it by 12. Now, the straight line prorate first and last is where I see a lot of our customers. So that would be that 115 start date, and let's say it's a 1/14/2026 as an example. It's going to amortize those remaining 16 days in January and the last 16 days for the end of the period. But in between that, it's going to be a flat amortization. So divide it by 10, and it's going to move forward. So by creating your deferral account in here, it's going to tell you exactly in the ledger where it's going to go. Now, if you noticed in the previous example, excuse me, we had a specific contra account and defer and target account in here. And so the way that I've set these up is to give you even more flexibility by reducing the amount of amortization templates that you need to create. So, and I'll show you some of the examples of that. All right. So now I want to talk a little bit about the chart of accounts as well. So there's a few ways, and I would say typically, when you set up your chart of accounts for the prepaid amortization, you're going to put those as an account type of current asset. So with NetSuite, you have a few options in which we can set that up, which I'm going to show you right now in the chart. So let's just look at prepaid expenses in here. Okay, so I would say 90% of our customers set up their prepaid GL accounts under the other current asset. Now, one of the things that I've done for this particular demonstration is to create a deferred expense account. Okay, and it's a little bit different than what you would normally see in here. And so that's pretty easy to set up. So you just view the view the chart of account or create a new one in here. And so this type of account gives you a little bit more reporting capabilities with respect to the amortization template. So that's specifically why I'm calling that out. But this is very standard with respect to how it's going to review in the balance sheet and so forth. And it's just like setting up any chart of account that you may need within your environment. And also, we can help you set that up as well. So if we need to do any kind of migration from your other current assets to a deferred expense account, we'll be more than happy to help you with that. And I think it'll make a little bit more sense as we get into the product itself. All right, so I'm going to go ahead and close this template down here, and then I'm going to go into our schedule. So what's really nice about this schedule in here is it gives you, from a view perspective, it gives you the amortization total amount. So you'll see the total amount of amortization that should be in your balance sheet, the remaining deferred balance. So that's obviously what is the remaining deferred that should be in your balance sheet today. So you can tick and tie and have assurance knowing that your amortization schedules are working correctly. And then in here, you'll have your total amortized. So this is obviously going to be what has been recognized within the profit and loss statement since the amortization schedule has been processed. Okay, and then obviously you'll have a scheduled name in here. And so that is actually the template itself that drives your amortization from the specific type of transaction. So going in here, we're able to see that amortization schedule. And what's really nice about this is you can have assurance of where it's going in the GL, when it's been recognized, and the journal entries associated to that amortization recognition. So, based upon how I've set this up, right, you have that prorate first and last period in here. And so the date executed is going to be when the journal entry has been processed, and that actual journal entry we can drill directly into from the amortization schedule. And so looking at the amounts in here, just like I said, it's going to take the first and last date of the transaction, amortize just those components of it, and then for the remaining periods in between, it's going to be a flat recognition. And it's going to show you the entire schedule in here, whether or not a journal entry has been recognized. And also the system will do catch-up periods as well. So let's say, as an example, I forgot to do a journal entry run. I can always do catch-up periods in the next, but it will also show you that what the expense should have been in that period. And then the cumulative balance of what's been totally recognized in here. So let's look at that journal entry, right? So this is the first journal entry that we ran for the create amortization journal entries. And so just pretty standard, right? You have your expense account, your debit, and your credit's going to automatically offset that. What's nice about this is you can tell exactly what the source of that transaction is going to be. So the amortization destination, that's going to be your expense, and then the source itself, so that's going to be your contra offset. And what's also nice in here is I don't think there's a specific name for this, but I call it a name transaction. So when you're looking at your chart of account, I'm sorry, your GL register, you can see the name of the vendor that it's associated to, and then obviously any kind of classification or segmentation that's involved in here. So as an example, the department, if there's a class or a location, but it also then ties it back to the schedule number, back to that number 4 amortization schedule. So it gives you full traceability between the creation of that amortization schedule all the way to the fully realized expense. And so going back to the schedule itself, there's a few information in here. So it's gonna give you that source transaction. So if you see in here, this one is created from a bill. So it's going to show you, okay, exactly what's the creation of this. So if you need to have any kind of traceability or any kind of approval processes, you'll be able to look at that transaction directly from the schedule itself, or be able to trace from that transaction directly into the amortization schedule. It'll also show that template. So that template that we've created. So if you need to create multiple templates associated with the amortization, you can obviously do that, and it will show you which exact template that you're utilizing here. So this would be good for if you have a need for creating a bunch of templates, so you can isolate what type of transaction is associated to which template. Okay, the start and end date. So that's going to be really important. It's going to be on the transaction itself, either the bill or the journal entry. And so that's going to determine at what point we're going to start the amortization and obviously end that amortization. And then the status in here is going to say either in progress, not started, or completed. And then it's essentially what that means. So as you have transactions in here, if you're coding something, let's say for March 28th, today's AP run, but it doesn't start until April 1st or April 2nd. It will say not started. And then anything in progress would be anything that has been currently recognized, but just not completed. And then obviously the completed section in here. All right, excuse me. Let's go directly to the bill itself. So this is going to be the source transaction where the amortization is going to be created based on the type of transaction we're going to look at. I'm going to also post a journal entry as well. So, I mean, this is pretty standard. You have your accounts payable invoice. And so what I've created here is a vendor's basic vendor and then put in the relevant information in here. So I like to look at big numbers. So I have a $450,000 amortization. So what's really different here? So if you remember the templates, and I can show this to you if we need, is you could specify the type of deferral account or the target account. So the way that I create these is a little bit different in the sense of I'm looking at, and let's just go back to that schedule here just to make, so I think it'll make a little bit more sense. So in that, from the schedule and then back to the template, remember I determine what that deferral account is. But from the transactional perspective, I want that to hit my marketing expense. So when you're coding things to your GL, utilizing a single template or even multiple templates, you can determine that the expense account that you want it to be. So this, based upon the template, is going to automatically drive in the GL where it's supposed to go based upon that transaction. So when you're setting these up, I know this looks a little bit weird because most accountants or most AP clerks will be coding this to prepaid, right? And then creating that journal entry to offset the prepaid amortization to the expense account. We're essentially flipping it. So it's a little bit backwards, but I think it makes sense once you get familiar with this. And so just like your any kind of classification or coding, you're going to want to put in your expense account, any kind of line description if you need it, and then your department amount. And then here's where we're going to start in those amortization templates. So the template will automatically get generated once the transaction has been approved. So as an example, if you have a workflow in your current environment today where all accounts payable or journal entries get approved by either the controller or an accounting manager or what have you, you have that traceability. So it will not post to the ledger until it's been approved based upon your workflow. And then the start and amortization. So again, that's going to really drive the amount based upon the type of template in here. I'm sorry, was there a question? Okay. All right. So again, having that amortization template, and then you can say based upon the chart of account that we have for our expense, it's going to automatically then run that amortization. And so just like any posting transaction within NetSuite, you can look at the GL impact, and this is where it's going to look a little bit different in the sense of it's going to actually post in here to our inventory. I'm sorry, to our prepaid based on that $450,000. So even though we have coded it directly to the marketing expense, it's actually going to hit in the ledger that prepaid to get that amortization template up in here. Okay, so then as you create your transactions, which I'm going to do right now, so I'm going to go to transaction, financial, and let's just do make journal entry. And these templates are agnostic with respect to the currency, right? Or even subsidiaries. So you don't have to create specific templates based on specific subsidiaries in here. So if you need to create it for let's say subsidiary 1 in this particular environment, and we needed to create an amortization based on Canadian dollars or European dollars or even GBP, we can do that utilizing the exact same template. So it's currency agnostic. Okay, so now we're going to create our journal entry. So again, it's, let's just do a debit to cash. Let's do cash, US checking. So I'm going to just credit that out by 13,000, let's just say. I'm going to put in my memo in here. So prepaid test, right? And then I'm going to put in my debit. So I'm going to do my 13100 account. Oops, sorry. I can put it to either prepaid or prepaid insurance, whichever account based upon that template. So if you have multiple templates, you're going to want to, put it to that specific templatized account. And so remember, going back to the being a little bit different in here. So I posted it to the prepaid, but we're actually going to want to be posting it to the expense account. So again, it's just a little bit different than what you would normally see. So let's put it back to marketing expense. Okay. And so now in here, I'm going to post this to the schedule itself. So it's going to have the schedule. And so I'm going to put in prepaid, and then I'm going to put in our start dates. So as an example, let's just amortize this really quickly over, say, 2 months. Add it in here. And then based upon your workflow and processes, it'll just go through either if there is a journal entry approval, it will get processed directly through that. And once that transaction is approved, it will get posted to the ledger, just like any normal transaction. So for this one, there is no approval process. It's going to get automatically posted. So if you notice in here now, instead of it being the prepaid template that we have created, it's going to now automatically create that amortization schedule. And so it's going to do the next in line. And so in this particular environment, we have it just coded as numbers. If you needed to change that nomenclature, so a lot of customers that I work with change it to like a prefix of AS for amortization schedule. You can do that as well. And then again, it's going to take those start and end dates. Okay. And then automatically create that amortization schedule for you. So again, based upon that template of where it's going to go, it's going to then automatically book it to that GL expense account for marketing based upon that template. So now what we're going to look at is, okay, how are we going to recognize journal entries in here? So during either our month-end process or even mid-month. So if you want to come in and recognize these for, let's say, the April reporting period, March 31st, you can certainly do that, provided your accounting period is open. So it's really straightforward. All you do is go to transactions, financial, create amortization journal entries. Now, this is going to be where you're going to run those schedules and then recognize them throughout the ledger in here. Okay, so for this particular example, you have your posting period. So that's going to be the period in which you're running it for, the current date. Obviously, you can also change the date to advance to the next period. So one of the things that I always do just to make sure that I have not forgotten an amortization is to include this prior period in here. So this would be that example, the catch-up period. So if I forgot or I got a late invoice that was coded after we closed our period, but it was for the March, I can then include that in the prior period so I can do my catch up in the next period. And so let's just advance this to the next period. Okay. And so based upon what's been approved in the ledger and how many templates you have and the subsidiary, it'll now give you, okay, anything that we need to post within that period, we can now automatically create transactions. Okay, so let's advance it to April just to kind of show you what would happen, right? So if again, going back to that, Eric forgot to post in the March period, and now we're in the April period, so we got to do some catch up in here. So let's actually post that. So it will show you all of the transactions associated within the current month and anything that requires a catch up. All right, and all of the amortization schedules, and then the percentage of recognizing here. So this one's a little bit weird, right? Because it looks 21.295% recognized. That's going to be the cumulative recognition of how much you have recognized. Whereas the journal entry that I just did has a 0% recognized. And then it's going to give you the amount of the period. So remember that template where we can have the prorate first and last? That's why this particular one has a little bit different of a recognition because it's based on the start and end dates, and then it's going to flatten out over that period. All right. So if I now unselect the include prior period, it is now only going to isolate to the April period. So let's just say you wanted to run an advanced journal entry to see where your expenses are going to be. You can do that utilizing the May and just not do any catch up if necessary. But I'm going to go ahead and post this to the April period. and create a journal entry. So it's pretty simple. You select your subsidiary. So you have subsidiary 1, subsidiary 2. And then you can decide to approve the journal entry. Now this could be applicable if you just want to run an approved journal entry based on an approved template, right? So if you don't want to have dual level approval saying that the source transaction has been approved by the controller or the accounting manager or what have you, you can then automatically post this to the ledger without having an additional approval. So it makes it a little bit more efficient if necessary. Okay, then all you got to do is you can hit estimate here to see if you have a lot of amortization templates. You can see exactly how much is going to get posted to the ledger, or you just create your journal entry. Okay, so it's going to run through that process. And then what's nice here is you see all of the transactions that have been associated to it. So remember that journal entry that I created, I didn't put a name toward it. So it's not going to show the name of the vendor. Whereas the other transactions that we've created for this demonstration has a vendor in here for basic one, cab consulting, and so forth. And then you see the journal entry that it's being posted to the ledger along with those schedules. So now let's look at the journal entry that it's going to get posted to, but also just to reiterate, let's look at that amortization template as well. Okay, so it's going to say all of the transactions in here. So it's going to have your debit to the expense of where I'm going to direct that expense, and then obviously that credit being offset in here. And so it'll also post to those name transactions. I really like posting either vendor or customer information into a journal entry because when I'm reviewing the account register or the balance sheet, if I need to dive into specific transactions in here, I can do that much more easily if in the absence of a name. So that's why I always try to put some sort of name in my journal entries. And then once that's processed, it'll show you the exact schedule, right? And then you can go in here based on your catch up. Now, if you noticed for my journal entry, I didn't post anything in March. It's going to show you the date executed. So that's going to be executed for our April 30th transaction, then the journal entry and the total amount amortized. Okay, so if you remember or recall, the chart of accounts that I had set up specific to this webinar was slightly different than what I would say a lot of folks that set up their prepaid. And there's no right answer or wrong answer on how to do that, but you do get with the deferred expense, you do get a little bit more capabilities by setting up that account under deferred expense. So I'm going to show you that as well. So under the amortization schedules, you get some really nice reporting as well. So I have marked this as deferred expense waterfall in detail, and then the amortization forecast summary. So let's look at the amortization forecast summary. So this is going to show all of the transactions associated to that specific transaction for the amortization, right? So I've got that journal entry here. Let me just blow this up just a little bit to make it a little bit easier to see. I've got that source document, the type of document as well, the date of those transactions, and then if there was a vendor. So this one actually has that no vendor because I never put that in there. Now, what's nice about this is the forecast just gives you what that whole forecast is going to be. But I can manipulate this report virtually however I want, right? So I'm going to put in our start date of January, and then if you notice in here, I put in our September. But I can fluctuate this based on the type of forecast I'm going to want to see for that period, and then the subsidiary context is what subsidiary you want to isolate that forecast to. So as an accountant, right, we always want to look at things by either the period or the quarter, and we can do that very easily by just selecting from our context view the accounting period and then just hit refresh. So if I wanted to look at this forecast in here based on how much has been recognized in from the January to the current period, I can do that. I can also manipulate it to say, okay, this bill in here for vendor one is going to amortize all the way through the September 2025 period. And the same thing is here. But if I needed to view that, let's say a little bit differently, and let's start this now in March. I can always just change that and manipulate those forecast data how I would want to see it. Another really good way of seeing it is by quarter, right? So if you're in your quarter end, or you're having to do, either for public reporting or what have you, you need to look at the actual quarter it is versus just from a by period month. You can do that as well, and let's look at each quarter. So for Q1, Q2, you're going to see all those amortizations in here. And this is really nice to be able to see. So if you didn't want to post it directly to the ledger in the beginning of the period, you can see from your budgetary aspect exactly which month is going to be posted and at what interval it's going to be posted as well. So I really like this report because you can see all the way through your from date and start date, how much amortization based on those templates and based on the source transactions that should be recognized in the ledger, giving you more assurance than just looking at each schedule by itself. So it's a really nice condense. Okay. So now I'm going to do the deferred expense waterfall. This is kind of similar to that amortization forecast, but just a little bit different, right? So based on the way that I've set this up, this is that GL account for deferred expense type versus that other current asset, which again, normally we would see in here. But what's really cool about this one or this type is how it can drive that reporting for you is you can see all of the transactions just like the forecast, but it'll give you your deferred expense balance and then prior period unrecognized if there's any unrecognized expense, and then the actual expense that should be recognized over here. So I would view this as your subledger, right? So if you're having to reconcile all of your prepaid amortizations within your balance sheet, this report here, utilizing that expense type of deferred expense, excuse me, the chart of account type of deferred expense, you can then have all this information flow directly in here. So you can say, okay, what is my beginning balance sheet balance for prepaid? What's my ending? And then in between, what's been recognized for an as of date. So if we needed to change this to, let's say, let's go out further. So I'm in June 2025. I needed to refresh this back into more periods and see, okay, everything thereafter or everything up to a year from uh, October 2025, I can see that as well. And so this is good if you need to, since you need to report long-term versus short-term. So anything within a year of the balance sheet or what have you can clearly see what that entry is going to look like. Okay. And again, going to the amortization templates, it's a really nice feature. It gets you out of Excel, right? It can help you streamline your close process. I know when I was in NetSuite, this was a lifesaver for us because we had a bunch of amortizations that we had to manually do on each month in Excel. So it brings it out of Excel and gives you some really nice reporting capabilities in here. So I'm going to pause here for any questions for a moment and take a quick sip of water. Anything in chat? Okay. So we've discussed amortization templates. Now let's get into the next phase of this, which is going to be allocation schedules. So this is really helpful for folks. I'm going to close out all my screens in here. This is going to be really helpful if you need to look at any kind of, part of the pun, allocations, right? So if you need to allocate from a departmental perspective or even an intra-company perspective, you can do that as well. So I just like with the tile for the amortizations, I've created an allocation schedule. Excuse me, yeah, an allocation schedule template as well. So let me just refresh that. All right. So I'm going to go into transactions, financials, create allocation schedules. I'm going to go to list to show you everything that has been created. So you have the ability to create intra and intra company allocation schedules. So if you need to move any expenses between subsidiaries or just interdepartmental expenses, you can do that as well. So I've created two in here for you, but you can create as many as necessary. And so the ones I want to show you today are going to be that intercompany and then a departmental allocation expense. So I've noted here this is going to be intercompany expenses. And then let's just do the marketing allocation as well. So the intercompany allocation schedule, you can create this so that it's based on the type, how many periods you want, the as of date. And you can just run this on a monthly basis, and it's really, really good if you have flat amortizations or even variable amortizations that you want to run on a consistent basis. So as we're setting these up, let me just go ahead and edit this transaction or this allocation schedule to show you how it kind of works. So you get, just like the amortization templates, you give it a name. So for here, I put in intercompany expenses. You can do the period frequency. So you can run this in specific intervals. You can do an auto, end of period. I typically see a lot of customers doing this at the end of the period during that month end close, especially departmental allocations. You can run it just one time. You can create it as many, virtually as many methods as you need with respect to that frequency. So let's say, for example, you just need to do it quarterly. You can do it that way as well. You can also specify how many periods do you want this run to. So let's say you have an amortization, or excuse me, an allocation that you want to run over the next 6 periods. I can post that in here directly. Or if you just want to have it run forever, meaning this is going to be a standard allocation you're going to want to see month over month, you can just leave that as November is forever, excuse me. So the allocation method. So you have a few methods in which to choose from. And here I've selected that fixed allocation method, but you also have the ability to do dynamic allocations. And so dynamic allocations are a little bit different. So in the sense of, if you want to allocate based on, let's say, headcount or square footage, you can do that. So with respect to headcount, what we would do is set up a safe search that will drive your headcount reporting. So how that's useful for folks is when there's a lot of it, even not a lot, but some movement within your headcount. So if, let's just say, someone's moving departments, or you're hiring new folks, it'll automatically move based on that saved search, so that you don't have to continuously update your allocation schedule. And so for dynamic allocation, you put in your dynamic, and then you put in your weight source. Now you can create as many weight sources as you want, and this is part of the statistical journal entries. It's a statistical chart of accounts. So I'm just going to utilize the fixed allocation here. And so for an intercompany expense, you're going to want to specify the type of transaction. So, excuse me, the type of subsidiary. So for this one, what I've done is I posted it to the primary entity, the headquarters. And so I'm saying now the type of intercompany. So I'm going to post this to intercompany expenses, but you can create as many eliminating chart of accounts as necessary if you want to drive more reporting. So it's really dependent upon how you want to see that. And so then here, what's really nice is you can specify the type of account, or you can specify the exact account that you want it to go to. And so you have a lot of options in here to say, okay, do I want it based on a specific type of vendor? Do I want it based on a specific department, or even GL account in here? So within this, you can say, all right, I want all, and I chose other expenses, but if I needed to, I can specify the account that we're allocating, or specify just the type of account. So in this example, I've utilized the other expense aspect. And so you can also determine the name, just like I said, and that would be the name of the vendor and the department. If there's any kind of specific location that you wanted to allocate that to, or you can just do it unassigned or any. So if you needed to allocate all departments, you can do that as well. And the same thing with our class structure. Okay, so now that's the source. So this is going to be the source of the allocation. Now we're going to get into the destination. So this is where it's going to post with respect to the debit side of it. And so because it's intercompany, right, you need to specify the type of subsidiary that, not the type, the subsidiary that you're going to be posting that transaction to. So in this instance, I wanted to take costs from headquarters and allocate it to both subsidiaries, subsidiary 1, subsidiary 2. You can do this in any order that you want, as long as it equates to percentages. So on the subsidiary here, I've decided that I want to specify the type of account here. So in the source, right? I've said anything and other expense, but the destination, I want it to go to a specific account within my subsidiaries chart of accounts in here. And then you obviously need to input the intercompany account. And this is going to make more sense when I show you that journal entry for the eliminating transactions, because we need to cross ledger. And then for this one, I wanted to say, okay, post this post this specific allocation only to my administration department. Okay, so I'm going to cancel out of this because I didn't change anything in here, and then create my history in here. So it'll say, okay, all of the transactions that I have created for each period, it will show you that transactional history as well. So you can dive into that exact journal entry or journal entries that it's associated to. So let's look at that intercompany journal entry in here. So this is now going to be automatically created from that allocation. And so what's really nice about this is, again, the traceability forwards and backwards from originating versus creation transaction. So from here, we're going to see this journal entry. So if you've done a lot of intercompany journal entries, you're going to see you're going to be able to see the template that it's associated from. And so it's going to look exactly like those intercompany journal entries that we normally see. So with the allocation template, I've specified the subsidiary. So my debit account, excuse me, my credit is actually going to be from my headquarters, and then the credit is actually going to go directly to the subsidiary one. There's two journal entries in here because I've specified it for two subsidiaries, but I'm just showing you the one for this example. And so what's nice here is you don't have to run the auto balance. It does it for you. So if you're familiar with intercompany journal entries in NetSuite, you have, and it's just like the source transaction with the amortization schedules, right? You have your allocation debit, your allocation source, and your credit, and so forth. And then you can dive directly into that ledger to see where it's going. And so remember, when we specify specific classes only on the source transaction, so I'm crediting that specific class, and then debiting no class in here, but I'm still keeping it that department of administration. And so with the intercompany accounts, you'll have your eliminating transactions, which will show directly in here. So it makes the movement of transactions for intercompany a little bit more seamless, especially if you have either dynamic or fixed type of allocations that you want to move across the brands. Right? So, okay. Now we've done intercompany allocations. So let's look at an intra-company allocation. So very similar to what the intercompany is. We're going to look at just a departmental allocation here. So I created this one for our marketing allocation. So what I liked about this is within this environment, we had a top line marketing expense. So if you ever want to just, ease of coding, have your marketing expense, but then specify it to sub accounts of marketing or what have you, we can do that as well. All right, so this is a fixed allocation, right? So I'm going to just go edit this transaction. And so what's a little bit different in here is we're not going to be posting it through intercompany. This is just going to be intra-company. So it's going to be within subsidiary one. So if you needed to have this allocation in subsidiary two as well, we could just quickly create one for that specific subsidiary. And just like the frequency, we can post this at the end of the period. We can have it post for a specific amount of periods. So a good example on this on marketing would be, let's say you have a marketing event that is going to occur for 3 months, right? And so you want to code everything to your marketing expenses, but then allocate it for a specific 3 months, then that allocation template would go away. That's where we could just put that remaining period. So it would be remaining of 3 periods. Okay, and then from here, we're going to do our just like intercompany, except taking out the intercompany side. We're going to utilize our credit source. So this is going to be the allocation from, and so that's going to be my top line marketing expense. Now for here, we don't need to specify a specific account because I've already done that on my credit source. And on this one, I only want to move marketing expenses. That's why I've specified my marketing department, right? And then on this, to me, this is for this particular example is class or location agnostic or even vendor agnostic. I just want to move specific values from one section to another within the chart of accounts. And so I can specify that. But let's say if you needed to specify a specific vendor, we can do that as well. So it gives you a lot of flexibility with respect to how you want to see this within the ledger. Okay, then the dynamic allocation, right? So I'm sorry, the fixed allocation. So from here, remember, I want to credit my source top line marketing, but then I have sub accounts of my marketing expenses in here that go to either marketing research expenses or even the marketing events. And I can specify the amount or the percentages in here. So for this one, I wanted to say, okay, the values are percentages, right? I can even utilize the source accounts. So let's say if I did not want to code this to two different accounts, I can change this very quickly in here and say I only want it to be sourced from that marketing account. So it's a like for like allocation. But perhaps maybe you want to allocate it instead of just to marketing, maybe you want to allocate it to all of the departments to see for allocated spend, right? But for this particular example, I decided, all right, that top line expense, right, and I'm going to move it between research and then marketing events, keeping it within that marketing department. But now I've also specified, okay, the type of location that I want. And so for this one, the weight needs to equal to 100, right? Because this value here is going to be based on percentages. But you can change those percentages however you want. So for this particular example, I've just decided to put it at 65% and then 35%. And so, or you can also do an even spread. So let's say it's 50-50, you just click the button and make it 50%, 50%. So I'm gonna go ahead and cancel out of that. And now what we're gonna look at is the history, right? So I'm going to show the journal entry that it's associated to, very similar to the intercompany side of things. It's going to show us the exact debit and credit within the ledger. Okay, I've taken 811,000 from my top line marketing expense, and now I've allocated those out. And just like any type of source transaction, you can see the type of movement in here. So if you need to look at the memo or you need to do analysis on journal entries of what's going on here, it'll give you a good basis of, okay, this was a system created journal entry, and give you that traceability within the ledger itself of why it's being moved. What was that generation? And so now we've got our department and our location. But on the credit side for that top line marketing expense, we did not specify a specific department in here. So it gives you a lot of flexibility with respect to how you want to do your allocations and templates within here. Okay, so I've spoken quite a bit. So what we've discussed today is the amortization templates, removing things out of Excel, giving you a little bit more traceability on how you want your prepaids to run, and then looking at our allocation schedules, both from an intercompany and intra-company perspective. So I'm going to go ahead and pause here for any kind of Q&A that we'd like to get started on.
Thank you, Eric. Anyone, if you have any questions, please pose your questions using the chat function here on Zoom. And we'll pause here for some questions. All right, Eric, no questions on the Zoom chat.
Okay,
I guess you were very thorough.
I guess so.
All right, that sounds good. Well, in closing, what I'd like to do is really thank you everyone for attending our session today, talking about NetSuite Advanced Financials and Accounting Features. As a reminder, you will receive a recording of this webinar in the next few days. Please engage with us so that we can make sure to answer any questions you may have. You can engage with us by either contacting your account manager or your customer engagement manager, or reply back to any of our emails, and we'll make sure to forward your email to your assigned C3 advocate. If you have any topics you would like for us to cover in future webinars, please, we want to hear from you. Let your customer engagement team member know, and we'll be sure to cover that topic in a future webinar. This concludes our webinar for today. Make it a great day, everyone. Take care. Bye-bye.
Thank you.
Thank you.
Thank you so